Hey TikTok, Jim Malone here, coming to you live on Dallas Trading Floor. So here we go. We're also live on YouTube at youtube.com/Dallas Trading Floor. We're live on Periscope, pscp.tv/Dallas Trading Floor, and we've had a technical difficulty with Facebook, so we're not live on Facebook, but we do have. Also, we have an interesting show today because I am going to show you three potential option plays on earnings season. Earnings season is a time when you can make some money on options. And what you do basically is you use either a bear call spread or a bull call spread, depending on how you want to profit from the earnings season. If you believe that the stock is going to move higher, you use a bull call spread. If you believe it is going lower, you use a bear call spread. And I'll go into that and explain that a little bit today on the show. Also, I'd like to show you, if you like to get all this information, I send out free trade alerts. And all you have to do is go to dallastradingfloor.com, just sign up, and you'll be on the list, and your scheduled trade alerts will come out. It's totally free. So it's just going to give you some ideas on trading and maybe, hopefully, make you some money. That's the whole idea behind this. And anyway, so let's get into it. Well, it's kind of interesting as we speak, because it looks as if the market has returned to an uptrend. Earlier this morning, not so much. It wasn't an uptrend this morning. It was, yeah, there we go. It was a downtrend. As a matter of fact, I got stopped out of Tesla yesterday at 1,669, but it's certainly come back a little bit lower than that now. As a matter of fact, they said on Robinhood platform, it was the most traded stock yesterday. And of course, when everyone piles in, some people pile out, and that's unfortunate. But here's the thing: you can always protect yourself. Remember to do this. Always do this. If you're long on a stock like Tesla, and you're in there, put a stop loss in at about 8% less than you pay for it, and then as the stock goes up, just move that stop loss up. And then if the thing reverses on you like it did yesterday, you'll be sold out. And that's what I do, and it's helped me a lot. I lost a lot of money before I did that. So this is just something that you could do. It's very easy to do, and hopefully it will preserve your capital while you're making more capital, and that's what we're all about here. So the market direction for the NASDAQ is up. Now, here's the interesting thing today. Most of the days that we've been talking, it's been the NASDAQ that's been the leader, the NASDAQ and the S&P, but more so the NASDAQ. Well, today it's the Dow Jones. That's really interesting. It seems like there's a rotation out of some of these big tech stocks. At least that's what they've been telling us. There's a rotation out of these big tech stocks into some of the other ones that may or may not be better. So that's kind of where it's going. Just want to show you a chart of the S&P 500, and that's really important to take a look at. Basically what we have here with the S&P is we are continuing above that 310 level. Right now it's 317.17. Now this is when this was taken a little bit of time ago, about 2 hours ago is when this was taken. But as you can see, we did a bounce off the 50-day moving average here, and then we've moved right up, the 10-week line, and we've moved right up, and it's actually up today slightly, well, actually more than slightly, but a little bit less than 1%. So that's pretty good for the S&P. But here is the interesting story, and that is with the QQQ. Now, when this was taken, it was slightly up, but it had been down earlier at 259. 250 is a very, very important level for the QQQ, and as you can see yesterday, it went up and then it moved down, and then it's moved down for most of the day, and it's sort of moving to equilibrium. For some, I think it's trying to get back to about the 260 level. That seems to be, from what I can see, that seems to be where where it's going there. So let's take a look at the Dow Jones. Now this is this is where most of the action was today. As you can see, it's bounced off of the 50-day moving average and then bounced again. So this one was quite good today. The volume's down a little bit, but it's up $4.10. So pretty excellent. So it seems to be that there is a movement to some of the beaten down sectors. Now, I want you to be very, very careful with this because a lot of people, that bought airlines, it's not been so good. Delta is probably going to lose money all this year, and they're the biggest and the best airline out there. And as a matter of fact, I heard that Qantas, because of this coronavirus thing, is not going to be flying to Australia until next year. Can you believe that? Wow. Next year. I kind of wanted to go to Australia this year, but I guess that's not going to happen because of this coronavirus thing. So, yeah, it's what it is what it is. It's just it is what it is out there. So let's see. We have some questions. Hey, JK. First thing, hey man, thank you. What do you think about debt spreads? The risks are manageable. I think so. I think so too. I like spreads. I really do. I like spreads. As a matter of fact, I'm going to show you. By the way, everybody that's looking on TikTok right now, we may be in an issue with TikTok. I hate to say this, but there's all kinds of noise that they may ban TikTok, at least in the United States. So I hope that doesn't happen, but it might. So if it does, please move over to my YouTube channel, because I have a great YouTube channel too. And as a matter of fact, you'll be able to see all the charts and graphs on YouTube. It's youtube.com/Dallas Trading Floor, and all the charts and everything are on there. By the way, if you want to look at this today, you're on TikTok. If you could switch over to Periscope, you'll see this right now, probably with no technical difficulties. You'll see all the charts and everything, and that's pscp.tv/Dallas Trading Floor. So the first one I want to show you, this chart on Tesla. I think it's, oops, I want to look there. Okay. I want to show you this chart on Tesla. Tesla had a kind of a blow off here. It went up. It was basically all the way up, and then it reversed, and it is down. So right now it's 1,500. I think this is going to be where it's going to see some stability. So we'll see. It looks as if that I want to look at this. I'll probably be back into the stock when I see a little bit of stability here. I was saying 1350. But it may be 1350 to about 1450, I think, is where you're going to see some stability. Right now, when this slot was taken, it was about 1506. So, and again, I sold out yesterday because of my stop loss. I sold out at 1669, and then, but I'm waiting to get back in because I definitely think Tesla is, it's one of the great stocks of probably my lifetime. So I want to get back into it. But right now, it's a little bit dicey. I think it's going to probably move a little bit lower. There's a lot of people that jumped in on Robinhood, and unfortunately, there were a lot of people that jumped out, and the stock kind of tanked yesterday a little bit. And but I think it's it's not. I think their numbers are going to be good. But I will be back in as soon as I can. So. Take a question from Long. Are you still in Blink? Absolutely. I still am in Blink. Now, I may not be in Blink after this, but yes, I'm still in Blink. And for everybody out there, what Blink is it's kind of a cool little company. It's sort of a penny stock. I normally don't do a lot in penny stocks, but I'm starting to, on this show, I'm trying to find good stocks that are kind of penny stocks that where you might get some traction on them, and Blink is one of them. I definitely think definitely think Blink is because Blink is a company that basically goes out and puts charging stations around in convenience stores and that kind of thing, and then splits the profit with the convenience store. And I was skeptical about it at first, but somebody called me up and said, "Hey, you've heard of this thing?" And I hadn't heard of it. So I looked on my iPhone, and I found that there was a charging like 2 blocks from my house. So I went over there, and I saw it, and I thought, "Wow, that's a great idea." So I'm still in Blink. I hope I won't regret it. But right now I'm in Blink. Basically, what I did to soften the potential blow, I got in to Blink at 640. Which is down from that a little bit. I have to check the price. I think it was $5.99 last night. That's with close. It probably is lower than that right now. But I did sell a call option just to kind of blunt that a little bit for 40 cents out in in August, an August call. They only have monthly calls for Blink, but I did that just for a little bit of protection, and I sold a 10 contract on that, a call for 10. So there you go. All right, let's see. Got stopped out of everything today. It was time to be in cash. Yeah, okay, good. See, I didn't get stopped out of everything, but that's because some of mine were lower buys. But you know what? Here's the thing: it's better to have the cash because it'll readjust. It always does, but you always want to maintain your capital. So you think, darn, that's that kind of stinks. But in a way, it's a good thing. I think you should look to start to possibly change your positions up a little bit, because when you get stopped out, that's a signal. And it's a very strong signal that the market is changing character. I believe that's true. I do believe that now, there's been a lot of movement into the text, which is fantastic. There's going to be some profit taking now. So you want to kind of, if you get stopped out of, I wouldn't return immediately into the text, just because, I think they'll be there in the future, but be a little bit more careful. Go a little bit more to cash now, because I could feel sort of, I wish I was Yoda, but it's sort of like there's a disturbance in the force. Okay, I think that we're moving a little bit sideways. So we want to probably err on the side of cash right now. I think that's a really good idea. That's a really, really good idea on that. But there's going to be plenty of opportunities. Don't worry about it. The next thing I'm going to show you here right now, and by the way, for everybody on TikTok, I'm showing this on Periscope and YouTube, youtube.com/DallasTradingFloor, and also on Periscope, pscp.tv/DallasTradingFloor, and you'll be able to see these earnings plays. Now, here's what I'm saying. We're coming up on earnings season. Now, why is that important? Well, one of the major reasons that's important is because it gives us opportunities to potentially do option plays, and I'm going to show you 3 that I have. By the way, if you're interested in these option plays, I have this on my stock alerts. I just sent out one right before I went on the air, and if you want to sign up for the free stock alerts, DallasTradingFloor.com. So just put that up on the screen. Okay, these are the earnings that are coming up very, very soon. Okay, I didn't look into Sleep Number, United Health. I just didn't really know a lot about these. I didn't have enough time to do the research. But there is a stock that I know a little bit about, and that's Netflix. And they're going to be reporting on basically they're going to be reporting on the 16th, which is just around the corner here. So I do believe that we're going to see a good report on Netflix, and the reason I do is because all the movie theaters are closed. Everybody's at home. What are they going to do? They're going to look at Netflix, right? So I think the earnings are going to be good. Here's my options play. Now you have to sometimes adjust these numbers a little bit, because depending on where it's selling for, that's going to determine how you put the trade on. But basically, the way this trade works, it's very, very simple. You look to see kind of where the stock is trading before the earnings, and at this case, when this was taken, it was down a little bit at 519.89. And then what you do is you buy the lower call, the lower strike price call, which in this case is the 510 strike price right here. Okay, and then you sell the higher strike price, which in this case is the 515. So it's right very close. It's just there's almost no difference in it. Now here's the beauty deal with this, and this is, by the way, per contract. You can scale it up, scale it down, however you want to do it. This one closes basically at the end of the week, or on Friday, the 17th. That's one day after it reports. I'm expecting a good report. If a good report, possibly the stock price will go up. As a matter of fact, it's already started to go up. As you can see, this is 519 when I did this. So already you're going to see that going up. So if the stock, say, goes up just 2 or 3 points, you're going to see by Friday, you're going to make a maximum gain on this 253. But remember, your cost on this, you have a chance of making all your money back plus this 253. So it's about a 1-for-1, not a bad deal. I think it's a fairly safe bet. To get into this trade, it's going to be $247 per spread. So it's going you basically what you're going to do is you're going to buy the 515 the 5 you're going to buy the 510 call, and you're going to sell the 515 call, and that kind of shows it here. It's going to cost you $2,465 to buy that, but because you're going to sell that other call, you're going to get 2218. Now, of course, these will, depending on how it goes, these will change as, this is changeable, but this is sort of the general idea. If the stock then, after earnings, goes higher than this number here, actually the 215 number, it closes higher than 215. It's already up above 215, so the chances of this happening are pretty good. By Friday, you see, you'll end up with $253. So that's a pretty good deal. That's almost 100% gain in 3 days, and it's totally scalable. So this is the options play on Netflix. If you want to get this, I just sent out this in the free trade alerts. If you want to get this and other things, kind of money-making ideas that you can do on options, give me a subscription at DallasTradingFloor.com. So I'm in there. Now, I want to show you another one that I have that I think you might be interested in. This is another earnings that there's 2 other companies that I think I have a fairly good idea that are going to move in a certain way. The first one is Taiwan Semiconductor. Well, I love this stock. I've always loved this stock. I used to be based in Silicon Valley, and Taiwan Semiconductor is one of the best fabs in the world. They make for everybody, like Apple, you read about. So other people design their chips, and then Taiwan Semi makes it. I believe that they're going to report also on the 16th. I think they're going to report well, and I do believe they are going to go up. As a matter of fact, that's what they're saying. They're saying that they're likely to move higher as well. So here's what I would do with Taiwan Semiconductor. With Taiwan Semiconductor, again, we're doing the same kind of trade. Now you can see this is a cup and it's moved higher. So I do believe this is going to continue going. So I think it's a fairly low risk bet. And this is going to basically cost you $67.20 per contract that you do like this. And what you do is you buy the July 66 call, and then you sell the 70 call. That gives you a range of about four points there that can move any direction. So basically, the total cost on this to do this, when I calculated it, was about $126. Now, if it closes at above 66.67, you can see, well, it has to go a little bit more. It has to close at above 67.33. You see, you start to make profit, and then you make profit all the way up into this zone, for about $274 per each contract that you do. So, would you invest $126 to possibly make $274? Excuse me, in 2 or 3 days? I probably would. As a matter of fact, I'll probably be in on this one trade. By the way, if you want to see more like this, you can, and you just do it by getting on our free trade alerts at DallasTradingFloor.com and just sign up for our free trade alerts, and these are all free. All right, so I have another question here. Any thoughts about Disney? Good question. Let me get to Disney just in a second, but I will do that in just a second. I appreciate you bringing up about Disney. I am not very bullish on Disney right now because of this COVID-19 thing. I think it's going to be some trouble. But I will cover that in just a second. Let me just show you one more trade that you might be interested in. And this is a play on Ally Financial. Now, what is Ally Financial? Well, Ally Financial, I don't know if back in the day, if you ever financed a car through GMAC, if you went to GMAC and said, "Hey, I want to buy your car," and they have the rebate and all that stuff. Well, they usually finance through this thing called they used to call it GMAC. Well, when General Motors went bankrupt, they reorganized and they spun off this thing called Ally Financial to buy up all that car debt. Well, I don't think they're going to do very well because, frankly, I don't think people have a lot of money to buy cars right now. Just my opinion. So I don't think the numbers are going to be terribly good on Ally Financial. So I do expect that it's going to trend down. So what I'm proposing to do on Ally Financial is to do a bear call spread, not a bull call spread, but a bear call spread. And basically, it's just like a bull call spread, but you reverse it. And here's how you do it: you buy the July 17th call, the 22 call, which in this case will cost you about 40 cents a call, and then you sell the July 16 call. Okay, so you get a net credit in your account when you do this immediately of $435. Now, what happens? Well, if on Friday they report and they do okay and everything happens, well, that's great. But you don't want to have. But if it goes lower, and I do think it will go lower, then the lower it goes, the more you make. Is that pretty good, huh? So let's say it's trading at 20 now, and it would go down to $19.20 a share. Well, you'd make $115 for this. And by the way, you'd give back a little bit of it, but this goes into your account, so you got the safety of that. The $435 goes into your account, and then if it trades, if it trades down, you're going to make some money. Now, if it trades up, well, you may not get as much back. Okay, if it trades really far up, well, you're gonna have to give back all that you put in there. But I do think this will trade down. So that is a way that you can benefit on it. So the break even for this, and this is the important thing to learn, is that if the stock trades lower than $20.35 on Friday, you're a winner chicken dinner, and you actually will make money. And that's shown here in this chart here. And by the way, if you want to see more of these, you can just, I send these out in trade alerts and at dellastradingfloor.com, and just subscribe, and it's all free. Okay, so now, last but not least, I'm going to show you my portfolio. You say, wow, that's pretty light. You don't have a lot of stuff in there. Well, I got stopped out of KL, Kirkland Lake Gold. I was wrong on that. But again, because I had the stop loss, I wasn't that wrong. So I'll be back in when it's right. I got stopped out of Tesla. Wow, can you believe it? I'm still in Netflix, and again, I showed you the options trade on that. I'm still in Viva Systems, Teladoc, and this Blink charging. I'm still here, believe it or not. I haven't gotten stopped out, which is amazing. I still think it's probably going to go up, but we have to. This was kind of you put it on the back burner and see if it'll boil. I'm also in an interesting options play. Now, this is an options play, kind of like the bear call spread that I showed you on Maxam integrated products. And the reason I'm in this one is because they are going to be acquired by they're going to be acquired by Analog Devices, and they probably will appreciate in that situation. So hopefully it will. We'll see. Anyways, this is where I am currently. I'm having trouble getting on Facebook, but that is the Facebook address. So no more said. So let's get to your questions, and that's the most important thing, to see kind of where we're at on there. So let's quickly go over and look at some stocks. All right, so if Tesla is added, it looks to be bullish. I think it is bullish. But here's the thing about Tesla. Everybody is trying to buy Tesla shares through Robinhood. Nothing wrong with Robinhood, but whenever that happens, sometimes it takes a dump. So let's take a quick look at Tesla, how it's trading now. And we're just about to close, so TSLA. I'm out of it. I was stopped out It is up. Yeah, it's up 25 cents. Oh, I think it's settling about at that 1500 range. So I suspect what I would probably do on this one, I would wait maybe until the end of the week or so and find out. Yeah, see, after hours it's down. It's settling at this $1,500 level. What I would do is wait until the end of the week, and then I would probably put a limit order in on it at about, I think about 1450 would be good. And I think you might get a fill on it because I do believe it's gonna move around this here. So let's go ahead and just show you the daily chart on it. Normally I don't look at the daily charts, but with Tesla it is so volatile that, as a matter of fact, I think we want to look at the intraday chart because that's going to give us a good tell on it. So let's look at that intraday chart on Tesla, and let me pull that up here real quick so you can see it. This was the blow off here. As you can see, it blew up to 1794. Basically what happens is then I ended up getting sold out right about here, right about, it was about 130, and because I had a stop loss in, and it was a trailing stop loss, and it just came and it just it just sold me out pretty much. No, I'm sorry. Yeah, it's just and then about at this level, it then went down, and now it's starting to see some strength here. Now, who knows? But I do think that the levels that we're going to look at, we're going to come back down here to about the $1,400 level. So we're going to be trading probably from about 1,400 up to 1,500. I believe, and I'm just going to split the difference. I'm going to say, I think we're going to see some support in the 1,450 range. So I think if you want to go back in and buy Tesla, that might be a good limit order to do that, because I think you have a high likelihood of probably picking up share. And I do think it's going to continue to go up, but it is very, very volatile. So, you can get, you can get trapped there. How old do you have to be to trade? Gosh, I think I'm corrupting the youth here. No, you have to actually, if you use your parents, you don't have to be anything. You can be under 18. I don't know if you want to do that though. You really usually have to be about 18 to trade. But if you've got a father or an older brother or an older sister that's willing to help you, hey, why not trade through them? You do have to be about 18, I think, to open the account. But that doesn't mean you can't trade it. I mean, here's the thing. I wish when I was like 16, I had learned to trade. I would be a lot, I would probably wouldn't be here. I would probably be on a beach somewhere. But it's a really good thing to learn how to trade, because and you don't have to trade a lot of shares. You don't have to trade 100 shares. You can trade one share. One share, you can do great on. So, yeah, you do have to be 18. That's what I think. By the way, if you want to see these charts that I'm pulling up, just go over to Periscope. It's super easy. pscp.tv/Dallas Trading Floor, and you can see it on there. So let's see if I can get another question. 18 for your own account. Yeah, exactly. But you know what? You can always sign through. You always get it through your parents. I mean, just FYI. Okay. I didn't hear that from you. Okay. All right. Thoughts on OKE for long term? Wow, OKE. I'm not sure I know what OKE is. OKE. Let me just look at the chart here. I am so excited that people are tuning in that are younger. I think that's I think that's great. Here's one thing. If you're under 18, learn how to trade stocks. It's in some ways it's better than college. Trust me on this one. College is fun because there's lots of great parties and stuff like that. Not the COVID-19 thing, but learn how to trade. It's a great life skill. I'm telling you. It's definitely helped me over the years. So here we go. Do I like this chart? No, I do not like this chart. This chart does not give me a good feeling. All right? Okay, let me show you why I don't like this chart. I seem like the king of don't like, but it's a trend. It's a downward trending chart. Okay, so let's kind of analyze it here. Okay, it's a downward trending chart. We don't want to buy charts like this. Charts that go from up to low, no, no. We don't want those charts. So I don't like this chart. It's got a relative strength of 3, not a good sign that it has a relative strength of 3. Another thing too, and this is very dangerous, and by the way, you can see this if you are on TikTok. TikTok, if you move over to Periscope, just to look at this, you can see this. The 40-day moving average is below the 200-day moving average. You never want to buy a stock when the 40-day is below the 200-day. Why? Because that means it's trending down. So this stock has got all the bad and none of the good. So I couldn't recommend this. Sorry to say that because, I'm sorry to say it like that, but no, I can't recommend this one at all, unfortunately. I just can't do it. Okay, thoughts on Disney? Disney, I have, during the down, when the market was moving down, I actually shorted Disney, and I do think it's a potential short. I wouldn't be long in Disney, but let's look at the chart carefully. Yeah, okay, it's up today, but here's the thing. Oh my goodness. Okay, now, for those who are chart readers, and hopefully I'm going to have a little chart school, I want to show you something that is fascinating. Okay, this has a pattern called the head and shoulders. The head and shoulders is a pattern that happens right before the stock is ready to take a dive. And guess what's going to happen to this? Do you see this head here and this shoulder? This left shoulder is higher than the right shoulder. And you see it's making progress? Mamma mia, thank you for bringing this to my attention. Folks, this is a really good opportunity. This is not a good opportunity to own the stock. This is a good opportunity to short the stock. Disney is going to go down. Disney is going to go down. Once it breaks through this 40-day moving average, there's a high likelihood it's going to go boop like that, down. Okay, I'm going to try to put this on one of my shows for the future. Now, it's not going to happen probably for a few weeks. I don't want to look at the daily chart on this. I want to just take a look at the weekly and see if I can see it in there. Yeah, that's got head. It's not quite as good. It's not a perfect head and shoulders, but they never are. This is a stock to short, actually. Yeah, absolutely. There's the head, and there's the lower shoulder, and there's the upper shoulder. This is potentially a very profitable trade. Can be done in this. And what shorting is, you ask? Well, what it is that you go into your brokerage. You have to have a margin account, unfortunately, for this one. You borrow the shares, and then you sell them. And then you wait. If the stock goes down, you wait and you buy them back at a lower price. And guess what? They give you the difference. And this is called shorting. And I do believe that Disney is a candidate based on this chart pattern. So, it's chart reading is not an exact science. It's kind of like reading the tea leaves to some extent, but it does follow some basic things. And I do think that it looks like Disney is a short, if you can believe that. Wow. Okay, I have next question. What do you think about Fastly? This is a stock that I haven't really been studying that much. I've gotten a number of questions on it. I want to know more about it. FSLY. So here's a way I'm going to find out kind of what it's all about. All right, Fastly. 82. Okay, no, this is not a chart that you want to own. Let me pull it to the weekly and put it up here on the screen for everybody. This one is not a chart that you really want to own. This is just not the kind of thing you want to do. This is the weekly chart. Remember, you want to look at the weekly chart first. It's kind of going general to specific, so that you can tell kind of the action. It looks like it has peaked, and it looks like it is moving down. So I would not be in this one. It probably will move lower. So my opinion of Fastly is, if you're in it, make sure that you have a stop loss, and if you're not, don't get in it, because I don't think this is going to be a winner for you, unfortunately. It doesn't look like, hey, I've been wrong so many times, it's not funny. But my guess on Fastly is it just doesn't look like the kind of chart that I would buy. And as you can see, it's in a pretty crowded space. It's got a very good composite rating, though. I will say that, and it looks like it comes up on for earnings on August 5th. So, but this chart's starting to turn. Maybe it will turn back up, but never buy a stock when it's trending down. In the industry, they call that don't buy a falling knife, and I think that might. I don't know if it's going to be a falling knife because we've got some very very strong numbers on it, but I wouldn't buy this one. There's other ones out there that you can make better money on, I think. So what Qualcomm and RVP. Qualcomm is a great company, and I do believe, because we're coming up on September 23rd, which is when Apple announces its new 5G iPhone. And by the way, Qualcomm is very involved with this. Oh yeah, this is a quality. Yeah, look at that chart. Okay, so let me show. Oh, that's Walt Disney. So let me see if I can pull up Qualcomm's chart here and show it to you. QCOM is the symbol on it. Qualcomm. There we go. Oh yeah, it's up nicely today. Even in a struggling tech market, it's up. That's a very good sign, and it looks like it is moving. Yeah. Okay. So let's show that and pull that up. Now I'm showing you the daily chart. Again, I want to look at the weekly chart to kind of get a better idea. Okay, it's looking very nice. Yeah, this is a nice chart. It looks as if, well, I'm going to blow this up a little bit so everybody can see it with more ease, but because sometimes it's tough to, when the way it draws the bars on my screen. There we go. Yeah, this is this is extremely viable. Look at that. Okay, basically, the ultimate buy point is you could buy it right below the buy point right now if you're buying it at this price. Qualcomm is forming a very nice. It's not really a cup, but it's a cup without handle pattern. It looks like. Yeah, it's at 93. Yeah, this is absolutely viable. This would be a good time to buy it too. This is probably going to. Yeah, this is definitely going higher. Qualcomm is a way to go higher. Now, if you buy this one, start with a half position. And what do I mean by half position? Well, if let's say you had $100,000 and you divide it by 8, that would give you 8 full positions. You want to trade no more than about 8 full positions. On this one, I would take that. I would take the amount of money that you have, divide it by 8, and then invest initially half of that in a stock like this. But I'd also put a stop loss on it because it is a little bit off after hours, just slightly, 10 cents. It doesn't really, not really significant. Very good stock, very good buy. This is a good time to buy it. And thank you for the question. That's definitely a watch list stock by everyone. Qualcomm. And let me get back to the RVP, but I want to move on to this next question. Did you get stopped out of Tesla? Absolutely, I did get stopped out of Tesla. It was really funny. I mean, I got up and I looked at my stock like, well, why do I have so much cash in my account? What's the deal here? I couldn't figure it out. And then I said, oh man, I got stopped out of Tesla. And I looked and I was stopped out at 1669. And of course it dropped after that. But I'm glad I was stopped out. I'm waiting. I'll be back in. Tesla's quality. I'll be back in. But I was stopped out of it, and I removed it from my list today. So, but I love Tesla. It's done very well this year for me, anyways. And I was stopped out of it. So I really appreciate that question. Just for everyone out there. Okay, so let's see. And okay, is a good income statement and balance sheet. Okay, well, here's the thing about buying stocks that are purely income statement and balance sheet. I'm actually a trained accountant. Can you believe that? I actually got my CPA back in the day. One of the things that they don't teach you in business school and in accounting school is they said everything is about the income statement and balance sheet, which is a very, very important thing. But we're not buying the income statement and balance sheet. We're buying the future growth. That's why growth stocks almost always outperform value stocks. Why? Because that's where the money is going in the market. That's where people are placing their bets. That's where the funds are buying. That's what we're doing when we're buying stocks. We're trying to look out 6 months, maybe 18 months, and we're going to see where the big boys are going, and we're going to just follow along like little minnows behind them. And we're just going to pick up their little the little bits that they don't eat. And that's what we're trying to do, because if you don't there's two different kinds of ways of looking at stocks. One is the fundamental way. That's the Warren Buffett way, and it's great if you have an insurance company and you can wait forever. It works. But then there's the other way. It's called the technical way. And that's with chart patterns, and that's with looking at momentum, that kind of thing. And that is the father of that. Well, there's many people that do that, but the guy that really put this together is William O'Neill. I keep talking about him, but I'm just amazed at him. But basically, he created a lot of this with his system, this CanSlim system, that you can read about, by the way, in his famous book, How to Make Money in Stocks, a Winning System, Good Times or Bad. And by the way, you just go to the Half Price Books or the discount bookstore or even online, and you can buy it for less than $10. It's absolutely worth it. Definitely look at it, because CanSlim will open your eyes on what really moves the market and not what some people say moves the market. So it'll really open your eyes. Okay, NVIDIA. I love NVIDIA. NVIDIA is one of those great just chip names that even in a bad market, and I do think we're going to get some adjustment here in this market. I do think we're going to, oh gosh, it's just going up again. This, by the way, if you look back at my old videos on from basically the December time frame, when I started, actually, no, it was February, I guess. I was recommending the, NVIDIA at 280 on the buy point. Boy, I wish I had. Here's the thing. Sometimes I don't eat my own dog food. Because this is trading at 415. It's up $12. Man, it is unstoppable. Yeah, it's going to continue going up. I don't know how high. You never can say, but I think we're definitely. It's getting a little bit. It's getting a little bit extended, but it's just a quality company. If you're not already in it, wait for another buy point, because, I think we're a little bit extended here at 415. I think it's going to be a little bit tough to get into. This is a really good stock for options play potentially. And when does it report? Let's look. Okay, yeah, it reports on August 15th. Okay, so it just reported, and obviously it reported well. It reported. Yeah, it's very, very good if you're in it. I wouldn't jump. I wouldn't necessarily jump right back in this one. I would wait for a proper buy point. But even if you did buy it now, I think that you'd be okay. Just be a little bit careful, because on these earnings pops you can get a pullback. But this is a quality stock. Yeah, this is a really quality stock. Okay. Did you say that you got stopped out? I did. I got stopped out. I got stopped out yesterday. I sold my position, 100 shares, for $16.69 yesterday. And why? Because it wasn't Jim Malone that was saying, "Oh my goodness, I should sell Tesla." It was because it pulled back, and I was moving my stop loss up, and it sold me out. So that's why you want to do that. And of course, it went down from there. So I'll probably be a buyer again. Just rinse and repeat with Tesla. I do think it's an awesome company. So, she's stopped out at 1650. Okay, yeah, it's right about the same number that I got stopped out at. But anyways, it was cool. All right, ZYXI. No, I was stopped out of ZYXI too. Unfortunately, I'm not long currently on ZYXI. I do like the stock though. So, but I'm very strict. I set the stop loss, and then if I get stopped out, I don't, I'm very careful about that. Now, do I break my own rules? Unfortunately, I do. Sometimes I think I'm smarter than the market, and I'm usually not. So, the worst thing I do is that after I get stopped out, the thing starts going back up, and it's like, oh man, I got to get back in. I got to get it back in. You know what? That's always led to problems for me. Now, and this is another case, ZYXI. By the way, this is an excellent stock. I got stopped out of it. I did not go back into it. I held myself back from doing that, because usually I do. But yeah, it's up 3 cents. Not a lot, but I do think this is a quality stock. I want to see some better basing action though before I'm back into this one. But I don't think you're going to go wrong with this stock. It's got really good numbers. And as you can see, it's being accumulated heavily by the funds, and that's really what you want to see. That when you see that kind of thing, that it is something that you want to be in. So, good stock. I got stopped out of it, unfortunately. I just didn't buy it at the right point. I'm not back into it, but hopefully, that's definitely on my watch list. Here's the thing: if you get stopped out of the stock and it shows a nice, it sets up again, go and buy it again. But just don't totally, you totally be like what you do. Someone's like, I like it. Somebody's like, oh man, I got stopped out. I got to get back in. Don't do that. Wait a few days and see what happens. That's always a good idea. All right. What book do you recommend for options trading? Wow, that's a good question. It's funny. An options guy contacted me from New York. Wow, from New York. You would think I'm in New York because I've got this background that says New York Stock Exchange, but I'm not really. I'm really in Dallas. I'm get some more information on it in the next few days. But hopefully he's going to come on the show. And he's a Florida. He was trained in Chicago, and I can't really. There is a book that I use. It's called Basic Options Strategies, and that's a good way to start. It's available. Basic Options Strategies is available at a lot of bookstores. It is a real snore fest. Let me tell you, it's something that you want to make sure that you have coffee when you're reading this thing, because it's a little bit hard to read, but it does have the strategies in there, and it sort of puts the strategies out, which I think are really important, because then there are some other pricing models that you could use, and to do the options. But you can options. I'm going to hopefully on Dallas Trading Floor, I'm going to emphasize more some of the option strategies, especially around earnings time, because I do think it's a great way to play, and I think you can do very well doing it, and very low risk, and you can just kind of ring the register. Now, are you going to win every time? No. If it was, then nobody would be talking to you, because it would be a secret. But in a lot of these strategies, these low risk option strategies, they're winners 60-80% of the time. So if you work it, so that's my recommendation. I really have a bad recommendation. Over the years I've bought a whole bunch of books on options. A strategy guy that I really liked is there is a guy, Blue Collar Investor, BCI. He does a lot of covered calls. Start with the covered calls first, because that's going to give you, covered call strategies. I know that sounds really boring, but they have a very high likelihood of payoff. So I really like doing covered call options when I can't kind of figure things out, and then once I get a feel for it, then do the straddles and that kind of thing. So. But yeah, it's a very, very good way to make money. Square did very good. Okay, yes. By the way, everybody, that's great. I'm really glad you bring this up, Ken, because Square and PayPal are sort of part of the new economy. Now, I don't think they're properly. I don't really think Square is properly classified. It's classified as a technology company. It's really more like Visa or MasterCard, because it goes out there to all of the small business people. But I want to show you this chart. This is, and this is in a day when the NASDAQ is not doing particularly well. But look at Square. Look at Square. It's come down a little bit, but it's gaining strength here. I would wait to see. I wouldn't be a buyer here at this level, just because it's just really not a great buying pattern. But I definitely think it's gonna show some support. And then when it does, when it gets a basing pattern, that's either cup with handle, cup without handle, 3 week side. And hopefully, I'm going to put some of these on TikTok, some of these videos on what these basic patterns are. When it bases, I think it's definitely worth jumping into. But if you're in it, stay in it. Looks good, and make sure that you have a nice stop loss on it, because it can be volatile. But I think it's just a great stock, and that's an excellent suggestion. ZYX is getting hammered after. Sorry to hear that. Again, I was stopped out of it, so that's one of the reasons I put a stop loss on. Even if the chart is right, external information sometimes can just jump in there and ruin the parade. Absolutely. So that's why you always want to have that 8% stop loss on there, because you just can't tell. Now, hopefully it won't kick in as much, but it does, you're protected. So there you go. All right, so let's see. Right. Um, yeah, the money's in the stocks, by the way. Thank you for bringing that. Yeah, I mean, I was an accountant at KPMG in San Francisco. That's where I started, and then I went over to Price Waterhouse, it was great working there. I'm telling you, it was great working there. They have really nice amenities. They're working like crazy, but you get to stay in really fancy hotels. But do you make any money? No, I made a lot of money for them. I didn't make a lot of money myself. That was the problem. But a lot of good training. You learn a lot of things. You learn about financial analysis. That's what I kind of have done in my life before I started trading. I was a financial analyst. Don't depend totally on the income statement and balance sheet, because that's going to tell you the value of the business. It's not going to tell you the value. That's going to tell you the value of the business now, but it's not going to tell you necessarily the business in 6 months. And that's what the stock market does. The stock market looks and they say, wow, why is Tesla valued more than the big three combined? Well, if you look at it, they don't have as many assets as GM does, but why is it worth so much more? Well, because the stock market is forward looking, and they're looking and like, wow, these electric cars are going to be great, so we're going to value Tesla much higher than General Motors or Ford or Chrysler. Why? Because the future doesn't look as good for the internal combustion engine as it does for the electric car. So that's the reason why there's a difference between fundamental analysis, which are income statements and balance sheets. They're not, I'm not trying to say that they're not important. They are important, but they're important in that time period. They're important for paying the taxes and doing the provisions, not necessarily where the company's going. So you can have great companies that have great balance sheets that are going nowhere and they're going out of business. So the stock market is much more of a forward-looking indicator. So just a little soapbox there for that. Okay, cleared 15K today. Yes, wow, that's excellent. That's excellent. Well, keep it up. Here's the thing: if you're pulling down that kind of coin, take part of it, put it in cash, and put it to the side, because it might reverse on you. Seriously, just a thought. I'm not saying that in a bad way. But I'm just saying, take some money off the table. Like, for instance, I got stopped out of Tesla yesterday. What did I do? Well, the first thing I did is I took some cash and I put it into my cash account. Why? Because that had been an increase, you see. So cash management is important as well. All right, so SHLL. Let me see if I can get SHLL up here on the screen. Let me see if I can do that. SHLL. All right, SHLL code. Okay, this is one of the acquisition companies. Here's the thing about these acquisition companies. I can't really give you a good, I can't really tell you about these acquisition companies. Why? Because I don't know what they're buying. I don't know what assets they're buying. I don't know what companies they're buying into. So I really have a problem with these. And of course, this is up today, but it's trending down overall. So let's look at that. Let's look at the chart on this one. This isn't really a company that's buyable. Okay, basically what this is a fund. This is a fund that they're accumulating so that they then can go buy another company. This is more like a fund that is looking for an investment rather than an investment itself. It's 92. This is good. I just don't know what they're looking to invest in. That's my biggest problem. I don't like putting money with a company that I don't know what they make. I don't know what they do. I don't know how they make money. So that's my only. Now you can do well in that, but you can also do well. Yeah, you can. If you want to do that, it's more fun. You can get a lottery ticket, and that's actually more fun sometimes than this. But I wouldn't do this. Blank check companies. I am not one that believes in that. Your thoughts on Regeneron? REGN. So let me see if I can get Regeneron up here. REGN. I haven't been watching the news on Regeneron, so I don't know exactly what the status of their. Oh, look at that! Wow, that's incredible. Yeah, this is one high-priced stock, folks. Yeah, this basically doesn't have a lot of retail investors in it because it's so high-priced. But let me show you that the stock here. Let's look at the weekly chart. But 641 up $25. That's unbelievable. Yeah, it's just climbing right up that average. Yeah, I mean this could be a $1,000 stock literally. The float isn't very large. That's where part of the reason it's so expensive. But look at the earnings per share. Very nice. The earnings are coming out on August August 5th. But this is mostly institutionally held, so let's look here. Just want to see the percentage of management owns 9. It's actually a lot. 9.2% for the management owns. Okay, let me look here to see. Yeah. Okay. Shares outstanding. So this is a fairly small float. Here, 76 million shares. Yeah. Okay. Very good stock. Very, very good stock. I mean, I wish that I could own a bunch of those ones like that. All right. Run. Is it good to buy American Airlines stocks? Please don't buy the airlines. Please don't buy the airlines. Let me tell you something about what's going to happen in the airlines. This is kind of like what I was telling you about with the Disney stock that everybody has. Disney is getting ready to be a good short candidate, okay? The airline stocks are already too low. There's not a lot for them to short. There's not a lot for them to go down anymore. But I want to show you AAL because this stock probably will not make any money this year. Can you imagine that? And you say, how could that be? How could a company still be in business without making any money? Well, they have a very good credit rating and they can borrow a lot of money. So this is not a good story. I don't like American Airlines. I want to show you the stock because this chart, because this has got everything wrong with it and nothing really very good with it. So let me pull it over here. Here's the problem with American Airlines. First of all, it's going from the top left to the lower right. That's not good. And then not only that, it's got a composite rating of 2. Well, you could have a composite rating of 1. That would be worse, but that's the worst you can get. It's close at $11 a share. This is going to be a $5 stock. This is going to be a $5 stock. They're not going to make any money this year. I don't think the projections are very good. Yeah, look at that. Earnings per share last quarter was down 610%. That's terrible. That's terrible. They're paying people to fly in their airlines. It's not good. You don't want to own the stock. This stock is trending down, and I know that, on Robinhood, they say that, buy the Delta Airlines and all that, but these are horrible. You're going to lose money in this, so I can't recommend it. I just can't recommend any of the airline stocks right now. Just the way it is. How did you transfer from being a CPA to doing stock trading? Was it worth it? Well, it was okay. It was okay. The problem with it, it's very hard to get a CPA. It's very hard to get qualified. And then after you do all that, your earnings potential isn't that good. So you learn a lot, but you don't make any money. So that's not a good thing. You want to make a lot of money and not know a lot. That's the best way to be. That's what I try. That's what I try to do. Study stock trading, study options trading, and study trend trading, because this is something that you don't have to have a degree for. I don't have a PhD in stock trading. I have financial trading, but that doesn't really help you that much as a trader. Much as a trader. That's something that you definitely and don't think that just by getting a CPA you're gonna learn a lot about trading stock. You're not. You're just not. You're just not. The best way to learn how to trade stock is just do this. Just start small. Start to get a little bit of money, and then start doing some trend trading. And you don't have to trade 100 shares at a time, or you can trade options too. Trade a small account. And now with the no fee trading, you can do great. So that's my recommendation on that as well. So I have been yammering on for about an hour here, and I have one or two last things. What are your thoughts on ITM options or Netflix options? Netflix options probably are pretty good. Let me look at ITM. Let me look at some of the options chain on ITM really quickly here. Let me see if I can pull up the options chain for that. Let me just pull this up. Okay. Let me look at ITM. Right. Options chain on ITM. Let's see if we're seeing anything. Okay. And, oh, and AMD. ITM. And thanks for bearing with me while I pull this up. Appreciate it. I'm not seeing anything. Well, I'll have to get back to that. Unfortunately, Arnold, I really like your stuff, but I'm going to have to get back to you on that, maybe offline. What do you think about FNKO? FNKO? I don't know. Finko. Let me look at FNKO. See if we've got something that's viable there. FNKO. Funko at $6.36. No, this is not. Yeah, no, this is a bad one. No, this is a bad one. Obviously, you're interested in a low price stock that has a good chart. Let me point you in another direction. And I usually do this on the show. I give what I consider high-rated stocks that I think are potentially a good deal. And let me give you some names that I kind of like in this category. And one of them, and this is a gold miner, and I normally don't recommend gold miners, but this one's a good one. It's Canadian Gold Miner. It's a cheap stock, but it's got some very good fundamentals. And the problem when you're below $10 a share is they typically are much more difficult to make money on because they're more volatile. But this is one that I think that you might want to look at. It's a Canadian stock. Its symbol is BTG, and let me pull it up here for you. So instead of that Funko, which if you invested in it, it might not be so fun, because it's going the wrong way. Because you remember the Funko, it was going from the top to the down. You don't want that. You want a chart like this, down to up, right? That's kind of the way you want to go, right? This is B2 Gold Corp, BTG. It's got a 99 composite rating, and for a stock that's $6, wow, that's pretty nice. That's pretty stellar. It's a move above the 50-day moving average. It's got a relative strength of 93. That means it's outproducing all but 7% of the market. So that's the kind of stock you want to buy is a BTG instead of a Funko. I think this would be more fun than Funko, my opinion. So, anyways, that kind of gives you a good one that you might want. It's a cheap stock that has good fundamentals, BTG. But always remember when you're buying stocks like this, make sure you set a stop loss because these things reverse and they can hammer you. But if you buy a stock for $6 and it goes to $10 and you buy 1,000 shares, you're definitely going someplace nicer than Denny's, that's for sure. So so that's a way to buy a cheap stock that may work. RVP. Let's see if I can bring up RVP. Oh, and that's retractable. Okay, this is one I recommended. Thank you. And this is up strong, by the way. And I am, I didn't eat my dog food on this one. I should have bought some more retractable. I'm going to buy a retractable because I do think it's good. And I want to show you this chart. It's just very nice. Remember when I put out, I think it was last week, that I was talking about retractable? Now, I think the reason I think this is good is because it's in a very good space and it's got a good strong number. So you actually can make money in cheap stocks, okay? You can. But you got to make sure that they're really good. You got to be super, super selective. This one has a composite of 96. It's up today 38 cents, which doesn't sound like a lot, but when the stock is selling for $7.52, that's 5%, so that's pretty decent. This is a cheap stock that's a good stock. Retractable Technologies, RVP. So thanks for watching me on that. I probably what I do is I set aside a certain amount of my portfolio, and I have several accounts. And what I'm going to start doing, hopefully, is I'm going to create a special little portfolio of under $10 stocks that anyone can buy that have a potential to go up. So I'm working on that right now. I don't have this all ready. I wish I had more time to do all this stuff. But Retractable Technologies is definitely a winner, and I think they have a great product. It is a patented product, and it's used in all of the hospitals so that people don't get stuck with the hypodermic needles potentially infecting them. So this is a good one. Retractable Technologies, RVP. And thank you so much for taking a look at that. If you want to see more of that kind of stuff, all you have to do is sign up for my free trade alerts at DallasTradingFloor.com. And if you're watching on TikTok, why not sign up for my free trade alerts? All you have to do is go to my profile and then click on the link, and it just takes you right to the sign up page. Just sign up, and you'll get them free, and hopefully you can make some money. I'm going to try to have some various features on this show, kind of, under $10, option plays, stuff that, anyone can do and make money. So that's my goal here. And of course, please tell your friends about Dallas Trading Floor. I need you to watch me, and I need you to like me and all that stuff. So thanks again. I have one more question, one more comment. Sorry. Will you do live trading? I would love to do live trading in the future. I don't have the bandwidth right now, unfortunately, but I'm working up to that. I couldn't do it probably for more than an hour or two a day, because I'm working on some other things too with some larger money that doesn't allow me to be as much as a trader as I'd like to be, but I am looking into that. Currently, I'm not doing it just because I don't have the time. I set up my trades typically the night before, and then I execute them, and then I wait until the markets close and see how I've done. That's why I'm so into the stop losses and that kind of thing, because that way, if I'm doing something else, I get stopped out, and though it's a pain, I preserve my capital that way. But yeah, I'd love to do some live trading. It's really fun when you're doing it, and it's really fun to show people kind of what you're looking for and that kind of thing. And it's a lot of fun. Thanks for bringing that up. I appreciate it. And again, that's all for today, folks. But tomorrow I'll be on at 2, and I will see you then. So happy trading to everybody, and do sign up for the trade alerts at DallasTradingFloor.com.